Good afternoon. Welcome to Halftime Report. It's 12 noon. We're halfway through the trading session. I am Reema Tendulkar. With me today is Surbhi Upadhyay, and it's a global risk-on rally as we speak. For our markets, though, we have come off a tad bit from the high point of the day, so still up close to about 75 points. But at one point of time, we were boasting of a 100-point rally, at least on the Nifty. But it's all about the globe, right? You've seen some very strong gains across the Asian markets, powered by the monster rally that we saw in Dow Jones on Friday, a dovish Fed, easing of, the reserve requirements for the Chinese banks. All of it is looking good, though some of the optimism is tapering across the markets right now.
Hi, good afternoon, Reema. Absolutely. I think the proverbial Goldilocks scenario is what Wall Street is kind of working with. For us, I think the good news is that there are lots of pillars to today's rally. So you've got a lot of the big banks like ICICI, for instance, trending higher. Reliance has been a big support zone for the market as well. And the metals run continues from what we saw on Friday when the CRR cut happened in China. So metals is quite a buoyant part. A lot of the auto stocks, for instance, Maruti, which have been beaten down so badly in the last couple of sessions, they are seeing some buying as well, so finding some takers. So interesting day, a healthy mix in terms of the large caps that are moving up on the upside. In fact, mid caps are underperforming, and that's one clear trend that stands out. The advanced decline ratio is positive, but relatively speaking, the mid cap index is only sitting on a gain of less than, of course, well less than 0.5%. Let's get started. Here are the headlines this 12 noon Monday morning. Positive global cues take the market higher. The Sensex and the Nifty gain almost 1% each, led by Reliance and private banks like ICICI Bank, Axis and HDFC Bank. Mid-caps underperform. The rupee hits a 6-month high as the dollar eases.
Metal stocks gain today after global metal prices get a boost from China's reserve ratio requirement cut on Friday and the ongoing trade talk between US and China in Beijing.
Titan is among the key Nifty gainers today. The company expects 22% growth in the jewelry segment in FY19. Brokerages are positive on the stock after the third quarter update. Bharat Forge, however, hits a fresh 52-week low after North America Class 8 truck orders in December hit the lowest level since August 2017.
Only big bang announcements possible for farmers, but implementation on anything in the next 6 weeks is tough, says the former chairman of the Agriculture Price Commission, Dr. Ashok Gulati. Adds that the Prime Minister is likely to undertake something more innovative and bigger, and there could be around 5 to 6 lakh crore of loan waivers at the national level.
And all eyes on a press conference with new RBI Governor Shaktikant Das at 1 p.m. today. The governor's meeting with representatives from the MSME sector is currently underway.
Okay, that's the macro setup. Let's drill it down to individual stocks. This is our movers and shakers segment. This, the segment where we tell you about all the stocks that are moving around at 12 noon. Mangalam is here to tell us about Titan and the kind of update the management has given about the December quarter. Mangalam?
Well, Reema, over the weekend we got the quarterly update from Titan for the third quarter, and the key positives are: one, the consumer sentiment across the segments is picking up. That's a positive. Secondly, the company is doing well in what is a seasonally strong quarter. For the jewelry business, which is the mainstay of the company, they're seeing higher same-store sales-led growth, which is a positive because once same-store sales growth comes in, the operating leverage kicks in, and that's good for margins. More importantly, though, the company has guided for full-year jewelry business growth of 22% on the revenue front, and that's a positive because this implies a 25 to 28% growth, upwards of 25% growth in the remainder of 2 quarters, which is something better than what the street expected. Those are unknown positives or positive surprises that came in. The caution that the company gave was with regards to the margin in their watch business, and that is primarily on account of increased advertising expenses, and that is something the management has been talking about from the start of the first quarter. So there was no negative surprise, and there was a positive surprise, which is reflected in the stock price. Brokerages are sanguine about this move. Morgan Stanley says that this underscores their thesis of higher market share-led growth coming in on Titan. And at the same time, Citi, they expected 21% growth. The company went one step ahead, 22% growth for the jewelry business. They hold their target price at around 1,020 rupees. But all these brokerages, remember, we spoke with Abneesh this morning. He said that they will roll forward their earnings estimates post the third quarter numbers. And let's see whether there are price upgrades coming as well.
All right, Mangalam, thank you for that. Let's now move on to two more stocks. Both Group Finance as well as Bandhan Bank actually are trending towards the lows of the day. Bandhan is down almost 4% as we speak. Now, we have some more details coming in on the potential swap ratio that we could see in the deal if indeed Group Finance is going to be taken over by Bandhan Bank. Nisha has all those numbers for us and the analysis. Nisha, take it away.
Thanks for that, Surbi. Of course, we broke this story earlier, and now we gather that it is at a fairly advanced stage where Bandhan Bank is likely to buy out Group Finance by way of a merger. And this is likely to have the share swap of 3:5 as per the SEBI guidelines and the current market price of both these companies. Now, what it will do is HDFC Limited, which currently owns about 58% stake in Group Finance, will reduce to about 15.5 as per the swap ratio, and Bandhan Bank's promoters will land up owning from around 82% stake in the merged entity. It will be closer to 60%. Now, two things are very important here if this were to happen. First, of course, that Bandhan Bank, which is in violation of the RBI's guidelines as per the promoter stakeholding in that bank, will have to reduce it to 40%. They already crossed that limit in August last year. So they'll have to take more steps towards it, but this will be an important step towards meeting the RBI guideline. On the other hand, HDFC Limited, who can really have 5% stake in the merged entity bank, 5% more with RBI's approval, and above that, they will have to really see or shed that stake as well. So those are the important bits. But why Bandhan Bank is really trending lower is also because the overall valuations of Group Finance at the present levels is considered to be on the higher side, and just to meet the RBI's guidelines to make an expensive acquisition is something that the investors may not be very happy about. But this deal is likely to be announced very soon, is what we gather from sources with direct knowledge.
Thank you, Nisha, for that. She was the first one to highlight this on the 21st of December. It's time now to go across to Mangalam, and he's going to tell us about ITC. Mangalam?
Well, over the weekend, there was commentary coming in from the ministers at the GST panel, and that ministerial committee said that there could be a 1% calamity cess being levied in Kerala. And the street likes that. Why is that? Because, there was fears that perhaps this calamity cess on all the things in the GST regime would be across the country, and at the same time the quantum would be higher than 1%. So ITC watchers would perhaps take that with both hands, and that is something that Macquarie has written on as well. So they believe that this has been better than what the street was expecting. They maintain their outperform rating on the stock with a target upwards of 370 rupees, and they believe earnings growth is something that will drive the stock going forward. So no news in terms of an additional hike. Lower than expected hike is good news, but all eyes will of course be on the Jan 10th GST Council meet.
Okay, thank you very much for that. Sonal, it's over to you on Shobha Developers. Of course, the pre-sales, the volume, the value numbers look good for the look weak for the December quarter.
That's right, Reema. It looks weak for the December quarter, and that is because there is volume decline across all the geographies. Well, in terms of pre-sales, the volume is down around 2% on a YY basis. The pre-sales volume is also down around 3% on a YY basis. Not only on a year-on-year basis, even sequentially, there is a weakness that we are witnessing in Shobha Developers numbers. The realizations, however, they have improved both sequentially and on a YY basis. Talking about the geographies, well, basically Bengaluru, that contributes around 68% of total volumes. The volumes there declined by around 5%. Even in Gurugram, the volumes were down around 40% on a YY basis. Kochi saw some increase in volumes after the hit that they saw last quarter. That was because of Kerala floods. Brokerages, however, they are positive. Axis Cap says that despite festive season, the company reported lower than expected volumes, but they expect a revival in Q4 of FY19 volumes. Morgan Stanley remains bullish as ever. They expect pre-sales to remain steady, driven by both new and ongoing projects.
Sonal, there is a big move in so many of these real estate names. Look at HDI now up 8.5%, Indiabulls Real Estate up 5.5%, DLF has rallied about 4.5%, and Shobha too, despite bad news, that's also in the green. Is there any buzz in the market, or is there anything any news which is impacting the real estate sector positively?
Yes, that there is a news, and there is a possibility that in the next GST Council meet, they could cut the GST rate on under construction projects. Currently, it's around that 12% mark. They are planning to bring it down to the 8% mark, and there is a possibility if that happens, that definitely will be positive for all these real estate stocks. We did speak to Mr. Pandey a while back. Let's listen into what he had to say.
The proposal before the council was that today the real estate is taxed at the rate of 18%, and after land amendment the tax is at 12%. Now and this is only on the under construction flat. On the constructed flat, because there the GST cannot be levied, so there is no tax on this. So that led to a situation where the buyers were postponing their decisions till the flat is completed, and that led to a very cash crunch in the entire real estate sector. So and on the other hand, the buyer who was purchasing the flat, he was seeing at this 12% or 18% tax rate, and that also seemed very high. So what the proposal was that bring down the tax rate from 12% to 5% without input tax credit.
So the compensation scheme for the real estate.
Exactly. And then so the discussion took place in the GST Council meeting, and it was felt that this matter should be examined even with respect to there are various other issues in terms of total number of the entire revenue impact and other details. So some more details were required. So the matter has been referred to the Fitment Committee and also to the Law Committee.
Some important updates coming in on the ticker over there. So it seems after meeting the MSME sector participants, the RBI governor will now meet the NBFC sector as well. Remember that some of the NBFCs had actually gone all the way petitioning to the Prime Minister, claiming that they don't have easy access to credit, and a special dispensation or a special line of credit from the RBI is actually required. It seems that there will be some discussion perhaps on these matters on the 10th of January in Mumbai. Also, additionally, the direct tax collection numbers flash by. I think 13.5% thereabout is the growth for the month gone by, and that's slightly lower. The monthly run rate has fallen. The run rate was about 16% growth in December. That's kind of come down. So, of course, tax collections are a bit of a worry point as we're looking at the overall fiscal situation for the government. Anyhow, right now, let's move on to the next stock, and this is one that's under pressure as well today. Bharat Forge. Sonia is joining in to tell us how the North American truck business is doing for them. Sonia, how do the numbers look this time?
Oh, absolutely. It's a 24% month-on-month fall that we've seen in the Class A truck orders, and it's almost a 45% year-on-year fall that we've seen. So the lowest Class A truck orders since August of 2017. Now, FTR, which is the intel agency that comes out with these reports, has indicated that there is a huge backlog, and because of which they expect that over the next few months the sales will continue to be weak. In fact, CLSA has downgraded Bharat Forge to a sell from an outperform. They've cut the target price from 680 to 420. They say that not just the US truck market, but even the Indian truck market has started to deteriorate, and put together, the overall truck market forms 40 to 45% of the revenues for Bharat Forge. And because of that, they've cut their EPS estimates for FY 20 to 21 by 18 to 24%, citing weakness in the truck market. Also, because of the movement that we've seen, the fall that we've seen in crude prices, the industrial exports business is also something that could take a hit in the quarters to come. Hence, the stock has hit a new 52-week low today.
Yes, and it's down close to about 40% from its 52-week high of close to about 800. Just one correction, that RBI governor meeting with NBFCs will be on the 9th of January in Mumbai and not on the 10th of January. Here's a quick recap then of the top buzzing stocks. We've got Titan, Bandhan Bank, Group Finance, ITC, Shobha Developers, Godrej Properties, Kolte Patil. In fact, the entire basket of real estate companies, and finally Bharat Forge as well.
Okay, all right, so those are the movers and shakers of the afternoon. We're going to take a very quick break, but before we do that, Abhishek, you're tracking HDFC today. What are the developments here?
Well, the developments are, Surabhi, they have given some balance sheet details that they have grown in Q3 FY19. So, purchase of loans from HDFC Limited stood at 6,285 crores. That compares to about 6,060 crores in Q2 FY19. You look at the deposit momentum, that has slowed down a bit, and liquidity crisis was seen, in Q3 FY19. So, the deposit growth is at 22% YOY and 2.3% sequentially. In Q2, the deposit growth was at at 21% YOY but 3.4% sequentially. The loan growth momentum has also come down a bit, especially on a sequential performance. So the total loan book is at 7.8 lakh crore. That is an uptick of 23.7% YOY and about 4% sequentially. However, in Q2, the loan growth was well about 24% on a YOY basis and about 6% sequentially. So 6% sequential loan growth has come down to 4% sequential loan growth. The CASA ratio, that is the low-cost deposit ratio, which actually aids a bank in controlling its cost of funds, has declined to 41%. That compares to nearly about 44% YOY and about 42% sequentially. One key important number, if you look at the numbers on the upfront, lower loan growth, low cost of deposit, which would mean that there is a net interest margin decline. But you look at the credit deposit ratio, that is for every 100 rupees in the bank, how much credit is lent. Now that is at 91.6%, and that compares to about 90.1% in the previous quarter. So an uptick of credit deposit ratio actually leads to better improvement in margins. So the net interest margin in the previous quarter was at 4.3%. Back to you.
Okay, thank you very much for that. So the loan growth momentum may have slowed down on a quarter-on-quarter basis, but HDFC Bank may well just protect its net interest margin on the back of an improvement in its credit deposit rate.